The S&P 500 just broke below the SMA 200, and the last time that happened, the market went down by 15%. For the new investors who don't know, the SMA 200 is a super critical line of support. History shows when the S&P breaks below the SMA 200, it historically leads to bear markets. It also doesn't help that the biggest 7 companies in the world look horrible. In this video, we're gonna take a deep analytic dive into the Magnificent 7 weakness, understand why it could make us trouble, and how the big tech companies could drag the whole market down. Let's dive into it. For all the new investors, Mag 7 is a group of companies, the biggest in the United States, who are worth 30% of the S&P 500. Why is that a problem? It's a problem because if the top 7 start to weaken, the entire index loses its foundation and starts going down. So the Magnificent 7 ETF, after making a low in April, it went up by almost 80%. Hey guys, this is Alon.stocks, and I post daily content about investing and the stock market, completely for free. I would like to mention this content purpose is educational only, and this is not financial advice. Please like and subscribe, and let's continue. So let's start off with Amazon. So growth is slowing versus previous years, and in the technical, in the chart, it formed a double top with a gap down, and the price failed to hold the recent breakout level. Also, high operational cost hitting guidance makes margin pressure. Let's look at Amazon chart. So as you can see, she went up with a lot of gaps. Now, she had an earning report, gapped up, failed to, this is a resistance point, went down for support in the SMA 200, and then kind of rattled over here. After reporting, she gapped down. Now, she found a low point here, went up a lot of buyers, and couldn't break through this point and come close this gap. Now it's looking not very good. Also, you can say this is a double top pattern, very bearish technical analysis. Next up, we got Tesla. We talked about her in the previous video and explained that because of decline in requests for Model S and X, she stopped producing them, and now she's looking forward to become a physical AI company. In the technical, you can see a lower highs pattern, which is horrible, and she broke every single support level. The demand issues we talked about in the cars really hurt her, and the capex will grow significantly because of the robotics and automatic driving systems they want to implement in the company. Let's look at Tesla. So she went up pretty nicely, conquered her previous all-time high, and now she has a very bearish pattern called lower highs. She can't break through this, which is horrible, and in the last few days she broke below the SMA 200, a critical support line, and look at this, gap down, a ton of sellers. Nobody wants to buy this company. If this is interesting for you, you should watch the previous video we made about her. Okay, next up, Apple. So the reports are pretty good. She reported high margin and revenue. iPhone sales are meeting expectations but not beating them, so that is pretty good. Not amazing, just pretty good. The momentum in the chart is not the best. We're gonna check it out right now. Okay, so she had a few resistance points she couldn't break through. As you can see, she went up a lot, so it makes sense she'll go down a bit. Now she has this channel. You can see here sellers, here a lot of buyers. She found support in the SMA 200, which is a positive thing. As long as she's over this line, it's good. But if the market continues its downtrend, I don't think she will remain above the SMA. No. Okay, so now an interesting one. Broadcom, ticker AVGO. So the fundamentals are great. They reported there's high demand for AI networking. The problem is the charts. She's showing massive sellers momentum and bearish pullback signals. Let's check the chart. Okay, so here is Broadcom chart. As you can see, she found a resistance over here that she couldn't break through. It doesn't surprise me she went down because she did go up by 200% in like a year, half a year. So it makes sense she'll go down. Resistance number 1, resistance number 2, resistance number 3. Now, because she reported nicely, opened up with a gap and everything, I thought she's gonna continue the rise, but no. She found the resistance here again, broke below the SMA 200, and now all you can see is sellers, which is not a good sign. For the more optimistic people, you can see she stopped at the support line, which is a positive thing. But again, if the market continues with a downtrend, she might continue going down even below the support line. Okay, so now the stronger company, Google, Alphabet. So she is reporting that the cloud AI is accelerating and search revenue remains strong. In the technical, she continues to maintain a bullish uptrend channel. Now let's look at her chart. So let's look at Google's chart. So a few months ago, she had this cup and handle pattern and crossed over the SMA 150. A lot of investors made a lot of money using this playbook type of trade. So now she's over here. She made a low and then went down. So you can make this a resistance point. Now, for most people, the optimistic people, you can say this is a support line. But once again, if the market continues with a downtrend, this will also go down. Me personally, I really want her to go down to the SMA 200 and even more, because this company has insane revenue and financial data, and it's just a shame that her price is so high in the moment. Alright, second to last, Microsoft, ticker MSFT. So they reported that cloud growth is decelerating and competition is taking a slice of their pie. AI valuations are fully priced in, and the market reaction to recent earnings was negative. Also, the technicals are looking bad. After she forged the double top pattern, she went down like 30%. Let's look at the charts. This is Microsoft's chart, and as you can see, she forged a double top, which is a bearish pattern. Just a moment. Not only her reports were weak, also the chart is looking horrible. After breaking every single line of support, she reached here, and after making something that looked like a support line, she broke below that as well. Overall, she went down a lot, and I want to see a reverse in the trend, but as long as the market's looking the way it's looking, I'm not sure if we're gonna get that soon. Alright, second to last, we have Meta. So we talked about her in the previous videos. So the ad revenue is strong, the family of apps is strong, but they're losing money in the Reality Labs project, where they implement products like VR sets and smart glasses. Also, the capex is huge and investors do not like that. Let's check out the technicals though. So, as you can see, she went up a lot, but with a lot of gaps. For those who don't know, 80% of gaps tend to close. So now she had a breakthrough point here, she failed, and then opened with an earning gap, found a resistance, forged a head and shoulder pattern, and then in the second report gapped down. You can say this is her support line. Once again, found the resistance after buyers pushed her over here to close the gap. Here is the thing. Once again, market trend continues to go down. Market trend does not reverse. Then Meta might also go down and break below the support line. I saved the best for last. NVDA, the biggest company in the world. So her reports are super strong. Absolute dominance. The fundamentals are breaking records in revenue growth and everything basically. The problem is the technical, but I don't see it as a problem, and soon I'll explain why. Let's check NVIDIA's stock. So for the last 8 months, she hasn't been moving at all. You can see a up movement, down movement, nothing matters. Her price half a year ago and her price now, it's like a 3% difference. So she had a very strong support line, the SMA 200, which she broke below. Now, here is when I'm not worried. If Nvidia continues to go down, for example to 160, I'll just get the biggest company in the world in a discount. Isn't that amazing? I read the financial reports. I know she's worth that much. I mean, I'll just get her for a $20 discount. I'm in. What exactly happens if the Magnificent Seven fall? First of all, because of they weigh so much of the S&P 500 index, the S&P won't be able to rally if these stocks are flat or down, which puts pressure on the entire market. Second of all, profit taking will be way more popular, and smaller tech stocks, or even big ones, can pull back by 10% or more. Also, investors will panic when bulletproof names like Google, NVDA, and Meta, Microsoft, Apple, whatever, fall. The sentiment shifts from greed to extreme fear. Let's look at some recent times the S&P 500 broke below the SMA 200. So as you can see, in May, we had a critical point and the market went down 15% from the point it broke below. But after that, it recovered and went up like 80%, which is insane. It's important to know that it doesn't necessarily mean that when the market breaks below the SMA, there will be a crash. Because as you can see here, only a 3% downfall after falling, which is not that bad. Here, for example, you can see some bigger falls and spikes. But overall, it doesn't necessarily mean that because we broke below the SMA, the market will crash. So, to summarize it all, if multiple Magnificent 7 stocks weaken, while the S&P sits below the SMA 200, the probability of a market correction or crash increases to 85%. You have to watch the SMA 200. It's a market's ultimate vital sign.